for retirement savings purposes is that you can't touch the lifetime item until you're 60, whereas a pension is 55. So slight difference in the age there.
Is there anything in writing that will make sure that you get it at 60? Because obviously the retirement age changes. You know, it used to be 65. I'm sure now it's like 67.
Yeah, well, I mean, it's in the current legislation, but legislation can change.
Yeah.
I mean, they are moving the pension age from 55 up to 57.
Okay, that's your personal pension age, isn't it?
Yes, that's your personal pension age.
The state pension's above that.
Yeah, that's creeping up to 66 and 67.
Yeah.
Probably will be something like 70, 72 by the time we get there.
Yeah.
So, you know, those ages can change. But the one thing that legislation never really does is it doesn't retrospectively punish you. So, you know, if you've done a bit of planning and then they change legislation, it rarely makes what you've done, you know, completely null and void. It will change things going forward, and it might mean you've got to change your planning. I mean, they have done a lot of that around inheritance tax recently, which has really changed things. But around pensions, there's always rumours and speculation that they're going to make wholesale changes and remove the tax-free cash benefit and all this sort of thing. They have brought them back into your estate. So with pensions before, whenever I would speak to clients about their benefits, and I've talked about how good pensions are today, the thing that I don't say anymore, because from 2027 it's no longer a benefit, but pensions also used to sit outside, well, they still do today still, they sit outside of your estate. So you can be saving into a pension all your life, and if you passed away, that doesn't get taxed 40% inheritance tax like the rest of your estate does. It gets passed down outside of your estate to your beneficiaries. Phenomenal.
I think we're going to have to do an episode on inheritance tax and trying to avoid the 40%.
Yeah, look, it's such a huge part of what I do. Succession planning, estate planning. There's 7 or 8 different strategies, and in terms of priority or orders that you look at them will depend on client circumstances, but also on legislation changes. You know, there's been some recent shake-ups to inheritance tax, which has really changed some of the advice that we would have been given over the last 5 to 10 years. So that's when you need to do a deep dive into, because it's an ever-changing landscape, but it's very interesting and is one of probably the most tangibly beneficial things that I do as a financial planner. Okay. Because if I can explain to a client that in doing this piece of work, if you survive for 2 years or whatever it might be, then your family will have saved hundreds of thousands of pounds.
Yes.
It's very compelling.
Yeah.
And the value is very easy to understand.
I'm not too sure how true it is. I mean, because I've never been in that situation, but is it over 400,000 where you've got to pay the 40% inheritance tax or something like that? Or is it over a certain amount?
So quickly, you've got the nil rate band, which every individual has, which is £325,000. Okay. So if you have an estate over £325,000, you may be taxed on the excess at 40%. Okay. If you own a property and you pass it down to direct descendants, that's children, grandchildren, then you could have another £175,000, which is the residential nil rate band, which is £500,000. If you're a married couple and the first one predeceases the other and passes everything to the surviving spouse, passing assets between spouses on death is inheritance tax exempt. Okay. And you've not used a penny of your nil rate band. Okay. So on second death, you could potentially have £1 million worth of nil rate band. Yeah. So actually, and this is something that a lot of people don't seem to understand. A lot of people seem to think that inheritance tax will affect them. But if you're a married couple and you have a property that you're going to pass down to your children, which is a fair amount of people, then you are unlikely to have to pay an inheritance tax unless your total estate is worth over £1 million. Okay. So the threshold is actually probably higher than people think. And then above that, yes, you've got a 40% tax rate on everything else.
So what I'm not too sure is true or not is the 40% part. I've heard that a lot of people have to pay the 40% tax before they actually inherit the properties or so on. Is that true?
It yeah. So if somebody if somebody dies and an estate goes into probate, during that process, the inheritance tax needs to be paid. Okay. So yes,
and you haven't even sold the property as yet. So those funds, you just an average person living check to check, you wouldn't even have the money to pay that inheritance tax.
Well, it's not taxed on the beneficiary. It's taxed on the estate. Okay. So you have time to liquidate assets if you need to.
Okay,
so if you have so if you have a property and that's the only way that you're going to be able to pay the inheritance tax, so maybe the estate is just a large property, and then a little bit of cash and pensions above that, for example, then there might be a tax bill which is over and above what the liquid assets can afford, in which case you'd have to sell the property, and HMRC will give you time to do that. Okay. And that's a tax on the estate, not the beneficiary.
Got you.
There can potentially be cases where there is tax on the beneficiaries, and that's if the person who's died has made gifts to them over and above the annual exemptions, in which case, if they die within 7 years of making that gift, there's a potential for the value of that gift, or a chunk of it, to be clawed back into the estate and tested for inheritance tax. And if there's an inheritance tax liability there, that tax is on the beneficiary. So if you're given a large gift by an elderly family relative, just be wary that over the next 7 years, HMRC may come knocking and want some of that back.
They've got to survive the 7 years to keep it tax exempt.
Yes. The 40% rate starts to taper down. So if you make a gift, so if I made a gift to you of £100,000, you obviously have all of that. There's no tax in me giving you that gift. Yeah. Unless Jeremy Corbyn gets into government, and then he might like to do something about that. But yeah, if I survive 7 years, that's yours. No tax ever needs to be paid. If I die within the first 2 years, then potentially 40% of that would be clawed back from HMRC from you.
Crazy.
But from years 2 to 7, the 40% rate starts to taper away. So it goes in year 3. If I died, it would be a 32% tax rate, and then a 24%, and then 16, and then 8, and then 0. So it tapers away over those 7 years.
That just sounds so greedy.
Yeah, like, I don't disagree.
It was a gift in the first place. It sounds so greedy. It's like, well, you've got a gift. I want some.
Yeah.
You know?
Yeah, it's yeah, you're not wrong.
Like, it's just, how do you justify that? You know, like what is the real reason behind that?
It's also not like, it's